Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to our weekly podcast. Indian risk assets consolidated amid a global risk-off as investors recalibrated their expectations of further monetary policy action in the wake of stronger than expected US economic data. For the month of January 2023, US consumer spending rose a strong 1.8% from a contraction last month. US personal consumption expenditure, the Fed's preferred inflation gauge, rose 0.6% from a 0.2% growth last month. Minutes of the US FOMC policy meeting released last week indicated that while most policymakers agreed to narrow the pace of rate hikes to 25 basis points from 50 basis points earlier, they also noted that upside risks to inflation outlook remained a key factor shaping the policy outlook and that interest rates would need to move higher and stay elevated until inflation is clearly on a path to 2%. For the week, major global indices, including the MSCI emerging markets, Asia ex-Japan, and developed markets, fell around 1.7% to 2.6%. Major US indices logged their worst weekly losses in 2023, with the S&P 500, Nasdaq, and Dow Jones each declining by over 2% for the week. Short-term US Treasury yields, which closely track investors' interest rate expectations, shot up to a decadal high, with the 2-year Treasury note touching 4.8%, the highest since 2007. The 10-year US Treasury yield advanced to 3.95%. Back home, Indian equities snapped a 3-week winning streak and fell in line with most global peers. The Nifty index traded lower on all 5 trading sessions to post a decline of 2.5% for the week. Broader markets outperformed Nifty this week, with the Nifty mid-cap index down 1.5%, while the small-cap index was down 1.8% for the week. Among sectors, all sectoral indices ended the week in red, with metals, utilities, and realty declining by over 3%, while the FMCG fell the least. Indian fixed income market remained under pressure amid rising US bond yields and higher supply towards the end of the week as the RBI conducted a variable rate reverse repo auction alongside the weekly bond auction. For the week, the 10-year Indian government bond yield rose by 2 basis points to 7.39%, while the 3-year and 5-year Indian government bond yields fell by 4 basis points and 6 basis points, respectively. Other important news during the week was on India's FX reserve, which fell by USD 5.6 billion over the past week and stood at $561 billion. The second data was on India's credit growth, which stood at 16.5% year-on-year over the past fortnight. Over the coming week, all eyes will be on the movements in global markets and the release of key domestic data on India's gross domestic product for third quarter fiscal year 2023. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.